Hello there, I'm Erin Real for Asset TV, here on the floor of the New York Stock Exchange with PIMCO's Jerome Schneider. Jerome, thank you so much for being here.
It's great to be here on the exchange. We appreciate the opportunity to discuss markets these days. It's a fairly interesting time for markets and more importantly for investors to consider the outcome and perhaps the growth aspects of where we're going for the next year or so.
So on the subject of growth outlooks and capital preservation, really, you've spoken in the media a bunch about that. Can you expand on that a little here?
Yeah, we're really seeing that the economy right now is at a little bit of a pivot point. And that pivot point is sort of juxtaposed by two different facets. One, growth, which is going from a very high growth potential and actually high growth numbers from the past year or so, 4% plus, to one that is a more subdued growth outlook. And the second one is policy measures which can influence things from inflation to actually what we call animal spirits, consumerism. And we want to think about that in a different sense, given the outlooks that we're seeing going forward. So it is an uncertain outlook that we're continuing with as investors. And really at the top of mind is capital preservation ultimately. And the reason for that is in this environment, we have high rates, high nominal rates, and high real rates after inflation. And it makes it a very different prospect of how you want to think about investing for the future. Simply put, investors are moving their mindset from taking risk-taking, and capital appreciation that we've seen for the past 20 years or so, to a mindset of income generation, savings, capital preservation, defense. And they're finding themselves in that savings mindset, which means ultimately that income generation is going to become more important to protecting capital and safeguarding against perhaps the ravages of volatility that we might see, given the uncertainty that we're forecasting over the coming year or so.
Can you please tell us a little bit about the short-term suite option that you have at PIMCO for clients?
When we think about capital preservation, we think of it in different tiered aspects. First tier is being immediate cash needs, second tier is being an intermediate cash needs. And what that really means is investors looking to play a little more defense, focus on that savings potential, really need to move out of the traditional segments of capital preservation, move out of treasury bills, move out of money market funds, savings deposits. And what we've created is an ETF suite to help complement those traditional money market funds through a short-term and ultra-short strategy called Mint and a low-duration strategy called LDUR. These are strategies which complement traditional capital preservation, but also, given the benefits, have a multifaceted approach which allows you to do three things. Capital preservation, first and foremost, so being high in quality. Second of all, focus on liquidity management. You need liquidity at some point in time, so having the ability to pivot with a manager who can afford you liquidity when you do need to pivot to different strategies or actually have fundamental needs to live. And the third one is produce returns that are above markets that you would find in money market rates. And those three, having all three of those pillars put together, is exactly what the PIMCO ETF suite does in the short-term space.
So now that we know a little bit about Mint, can you tell us about BILZ and LDUR, those two, and how they differ from Mint?
Yeah. From our perspective, we recognize that there are some investors who simply want to stay high in quality and be attracted to really having a treasury-only type of mandate. And so what we've done is create that platform through our BILZ ETF, BILZ. Really what we're focused on is two aspects. One, that high quality demand for liquidity with high quality assets, but two, recognizing the fact that even in the high quality asset sector, there's still opportunities to produce excess returns through active management. And through our platform at PIMCO, we've created that as an opportunity set for investors to really take advantage of situations where they're manually buying T-bills, T-bill ladders, things like that, but put it in the hands of an expert like PIMCO who's trading tens of billions of dollars of short-term treasuries each and every day and looking to deploy that expertise in active management and producing additional returns other than simply having a buy and hold T-bill strategy. On the other aspect, we're extending out the curve beyond our Mint ETF into our low duration strategy. So think about 1 to 3 year holding periods. That's where the low duration space is, and that's where our low duration ETF LDUR fits in nicely. And really think about it as a portfolio which is going to remain also high in quality, but takes advantage of term premiums, additional liquidity premiums, and a diversified portfolio of high quality assets that allows investors to earn market returns over a cycle, meaning more than a year or so. And in earning those returns, we find ourselves in a situation of active management, playing some defense where there's perhaps overinflated asset classes, but moving to those asset classes that are cheaper and more attractive and produce additional returns. And that's exactly what we wanted to do in our LDUR. So we view all three of those as a complement to each other.
It makes a lot of sense. And lately we've heard from a lot of experts that they're moving to active management. Everyone's talking about active management, why this is advantageous to passive. Can you talk to us about why that is?
Yeah, it started as an endeavor 15 years ago at PIMCO when we created Mint as our first active ETF. And really what we recognize is that investors, specifically fixed income investors, may not necessarily realize that active management has a definitive advantage over benchmarked indexes or passive management. We wanted to bring that to the public in terms of educating them about the active management. And what we've done is extrapolate that over the years to other actively managed strategies, BILZ, Mint, including yield strategies like P-yield. So in that regard, active management finds itself as a tool that allows you to highlight those sectors which you think are attractive and steer clear of those sectors that you don't. But more importantly, in this environment where we are today, with uncertainty, looking at different opportunities, it's not necessarily a smooth playing field. And we're finding those opportunities to not only looking at what to buy, given our credit research, given our structured products groups, given our trading acumen, but also looking what to sell. And that's something that people really don't focus on, is that selling aspect to harvest gains and put it as total returns in a portfolio. More importantly, after 15 years, we're finally seeing that traction take up. So we're seeing over the course of 2025 and the end of 2024, over 50% of inflows into fixed income ETFs are actively managed. So it's a very exciting place that we're finally seeing the investor base take hold of what we've been saying for more than 15 years at PIMCO. So we welcome the opportunities to bring that active management and defense and offense to the client base through the ETF segment.
Jerome, thank you for your time and your insight. It's been a pleasure. Is there anything else you'd like to add?
At this point in time, we just simply say the outlook, while punctuated with uncertainty, uncertain outlook for growth, uncertain outlook for inflation, we understand why investors might want a solution that's a little bit more capital preservation oriented, staying high in quality. And in that regard, it's probably a wise situation to understand that there will be some opportunity for volatility in the marketplace. With that, looking at income sources of generation to produce returns is something to be said, and we think that PIMCO ETFs can help provide that solution.
Thank you so much for your time and your insight, and thank you for watching Asset TV.